Hey everyone, thanks for listening to the Adulting is Easy podcast. This is Lauren, and I manage the Adulting is Easy blog and podcast, which can be found at realadultingiseasy.com. If you can safely do so, please take a second and hit the follow button wherever you're listening. I'm joined today by Stephen Wealthy, creator of the financial investment blog site mywealthmoney.com. He started investing immediately after graduating university in 2003. And he's always had an eye and interest for investing, wealth building, and navigating the financial markets with consistency. Stephen is a self-employed IT consultant who works in the oil and gas sector with a specialty in GIS systems. He helps investors find that next level of investment or asset class that they can utilize to accelerate their wealth building endeavors. So real estate in your local area could be a prime example. Stephen is currently 43 years old, married with 3 kids, and living in Calgary, Canada. Stephen, thanks for joining me.
Thanks for having me, Lauren.
So our goal for today is to make adulting a bit easier for the listeners by discussing a personal finance topic, since managing money is a big part of adulting. So today, we could probably tell we kind of hinted at it in your bio, we're going to dive back into my favorite personal finance topic, which is real estate. And we're actually going to discuss something that I don't know a lot about and I've never talked about on this podcast, and that's flipping houses. But first, why don't we talk about what made you get into real estate to start with?
I've always thought it was a terrific asset class. I grew up in a home. My parents paid off the mortgage as quick as they could. They would always tell me routinely as we went through, just, as I'm aging and getting raised and stuff, just how their home was appreciating and how it was a good idea that I should do the same. Went to university and I was renting at the time because I'm in a different city and such. And so I rented from a fellow who had a condo at the time, and he had bought that for, I think, $60,000. And in short order, he turned that into $130,000. I think he sold it in 2 years. And
Wow.
so coupling that with, my upbringing, I'm like, wow, real estate's really an advantage and a terrific investment. And then this is also around the time too when Robert Kiyosaki's book of Rich Dad Poor Dad's coming out. And so I think taking those all of those together is like, I really need to look into this and invest as heavy as I can into it. Graduated, like you said in my bio there, in 2003. I moved back home, bought my first condo in 2004, and to this day I actually still own it and rent that out. And it's real estate, it always just works. I started dating my wife in around 2005, and her dad is really big into real estate. And not that was anything I was looking for. That was just like a lucky coincidence. He owns apartment buildings, and he has an eye for it and stuff. And so I've just been surrounded with it my whole life. It's just that it's one of the best asset classes you can ever invest into.
That's awesome. And it's cool to hear that from somebody who bought their first deal in 2004, because a lot of people that were getting into real estate at that time, I would say, are probably not in it today.
Yeah, it's funny. Yeah, there's been some ups and downs, that's for sure, with it. I think one of the things that helps with real estate is that you don't have that constant quote sitting in front of you. Like I can, you go onto the stock market and you know exactly what the quote is for your index or your particular stock, or you can go and find out what the price of Bitcoin is. I think that level of obscurity, or just that, what's my house worth? You're like, I don't know, it's probably worth like, $500,000, or what's my condo worth? I don't know, 150. But you don't truly know. You haven't had it just appraised. You didn't get.
Right. And even if the cost or the price of a value, I should say, of the condo goes down, it's not like the rent really does, right?
Yeah, no, that's a really good point there. So I bought the thing for 142 in 2004, and get this, today it is worth 182. Now between that, there's a peak and a valley, so it got up to 265.
Wow.
And to this day, I'm still kicking myself for not selling it. But I was like, oh no, it's going up forever. This will be worth 300. It'll be worth 400.
Right.
And they changed the laws in my local area to favor multi-density, like multifamily density. So they wanted to densify the city. And so they tried to pass laws and bylaws that would favor building condos and apartments and then restricting single family homes. And so home prices have gone up, like single detached have gone up, but then condos, the supply has it's risen quite a bit, right? And so I buy it at 142, it goes up to 265. It went down to 129.
Wow.
Now it's in 180. So real estate, yeah, in my experience, it's terrific, but it's not guaranteed to work all the time, and there is that headache part of it, type of thing.
Absolutely. And
Yeah.
that's something that I've increasingly noticed just, around Twitter or just when I'm talking to people, where there are a lot of adults right now who have not been through a real downturn. I mean, I know we had, the stock market dropped, I don't know what, 20-30% last March, but it was back up within a month, basically. I mean, we're at all-time
Hmm.
highs mid 2021, basically. There are people that don't remember that the price went down of like everything and how long that recession was. Whereas you went through it. You were already out of college or
Hmm.
university. I was in college from '08 to 2012, which, it's the whole thing started in 2008. I mean, I think my first couple of weeks in college is when Lehman failed, right? So and then I graduated 4 years later and it still sucked, right? So I remember that, but there's some people. I'm 31. There's some people that are younger than me that they really don't
Yeah.
know that the price can go down. So I do kind of wonder, and I
Yeah.
think it's really good that you're saying that. I do wonder how people are going to handle. I don't know how they would handle it if something that was worth 142 went down to 129.
Yeah. And then if you factor in inflation too, like that 142 isn't 142 anymore. Like I don't know what it would be
Right.
worth today and stuff, but like I'm probably under, if I could sell it today for 189, I'm under when it comes to inflation and
True.
that sort of
True.
thing. Yeah.
But you've gotten cash flow all the way, you said.
Yeah. Oh, yeah. Yeah. And that was the other point I wanted to make too. Is I rented it out at 13.95 to start. I think it got down to like 11.75, but it's back up to 14.50 now. So the rent has been really stable throughout all of that time. Just sometimes it was a little more difficult to rent. I think I've missed 1 month. That was about it. So in terms of cash flow and stability, it's been bang on, and it's in a good neighborhood too. Like it's surrounded with estate homes on either side, and backs onto a park, and so that there's kind of always that. I've never had a problem renting it out. It's always been really, really easy.
That's
Yeah.
awesome. I want to hold something for that long. I just of the three properties I own right now, I've bought in the last 3 years, and like there's already just tons of equity. But I'm like, okay, I'm not going to sell these, right? I'm going to keep them forever, but maybe tap some equity in the future. I'm not sure, but
Yeah.
I think it would be great to be able to look back and actually really look at how much good for my portfolio property has done over
Hmm.
time.
Well, and I think if you could, if you have like that crown jewel property that you really love, or just you're passionate about, you don't mind putting in extra time or extra money into if you had to. Sometimes that's just your primary residence or something like that, but residence. But if you can always grab that equity back out and go do another project and you know, do another play, right? As it goes up, pull it out and go do another property or opportunity that you can find along the way, and still keep that original asset. And, the percentages and the numbers won't always be perfect for you and stuff, because it's usually like something like 75 or 80% that you can pull, type of thing. And
Yep.
but I've seen that work a few times too.
Yeah, definitely. We just did a cash out refi. It was at 80% LTV, which was good. So we got
Hmm.
most of our reno back out and we are able to buy another place with it. So, but what else? So you started with this condo and renting it out. How did you get from there to
To
flipping
where I'm
houses?
flipping.
Yeah.
Yes, good question. So it really is. It's just patience and waiting. So last year when COVID hit, I had a blog post about March 13th, 2020 was when I lost my job, and I didn't get back to work until August of last year. So I had about 4 or 5 months off. It was difficult timing for sure. Like anyone who lost work and had to go through that, it's tough, and I empathize with him. During that time frame, like I said, my father-in-law, who's got quite an eye for real estate, and he's very patient, willing to pounce on a deal if one presents. We have another, my brother-in-law, he's a real estate agent, and he found a distressed property in a good neighborhood. And he basically said, hey, come check this out. It's foreclosed. The bank wants to get off their books as bad as possible. We went over there, took a look at it. It wasn't too bad. You walk in, you're like, oh yeah, okay, it's got some problems. It was a terrific deal. I think we bought that for $360. And talking about pulling out the equity from another property. So my father-in-law financed the whole thing. So he just pulled it out against another property that he already owns. And we got to work. And I think in some ways he saw it as an opportunity to give me something to do.
It's like, all right, I'm gonna employ my
right?
son-in-law.
Yeah, so there's some good lessons there, right? Like he saw an opportunity. He saw my ready hands. I had nothing to do, and so we jumped in, and yeah, it's nothing. There's nothing scientific to it at all. We didn't have a project plan. We didn't have a spreadsheet. We didn't have anything like that. It's just we just kind of scoped it out verbally, kind of wrote things down on paper, a scratch pad of just kind of listed out the things we wanted to do and improve upon. We knew we had to, fix the glaring defects, but then if we could add a little bit of a color or personality to it ourselves, that would help out, just kind of, make it our own type of thing. And yeah, just step through it. And so I had the whole summer off last year. And so I was there 8 hours a day, working, doing the flooring, doing the moldings, baseboards. My wife comes from a family of 4 daughters. And so we're all in this local area here together. And we're able to chip in and help out and stuff. So we got that done. I think it was from August to October. We flipped that and listed it, and it sold in 5 days. And
Wow.
then it was like December possession date and stuff like that. And so we got that. And then I myself, I'm like, guys, we got a really good team here together. We got to do this again. And then another opportunity popped up in January. This was that 1910 house that we found. Sorry, do you have any questions so far?
Well, yeah. What I'm like laughing to myself over here because you're like, I had the summer off. I'm like, you lost your job and then you worked 8 to 5 at a real estate property. Like, it doesn't really sound like you had the summer off. So that was cracking me up.
Yeah, yeah, it kind of. Yeah, I see what you're saying. Yeah, it kind of sucked.
No, that's great. Like a lot of people weren't working last year, and they weren't working. They weren't.
I see. Yeah.
Like you accomplished a lot. Like that is, I think that is so cool, and I love how you have said like it was a team. So you have your father-in-law who's like the bank. You have your brother-in-law who's the agent. You have you who's like the labor. Who else did you? I mean, that's not it though, right?
So I'm good with carpentry. So I did like all the flooring, the baseboards, the moldings, like I already kind of said there. I'm really good with saw and wood. And then we have another brother-in-law who's really good with electrical. So he was able to do all the rewiring, lighting, and you've done a couple of properties. Sometimes you got to move some electrical around or adjust the fuse box and stuff. And it can be, you don't want to do that on your own. You want to get a professional in for that. Like that's one of the more complicated trades. And so our strength is that combined, we're able to do almost all of the work. And then with him being a real estate agent or us having a real estate agent, that's a huge in, right? Like really gives us that closing cost advantage.
Yep.
He's able to give us, like an incredible deal on that. Plus he's got his ear to the ground. So he's able to get us good deals when he finds them. Really the message I have too, like with my blog site too, is like you got to know your advantage. You got to know where you excel, where you can make a difference. And then once you find that, you really got to lean into it. That's your way to differentiate yourself and separate from the herd and like really kind of find your, on track and field, like find your lane and find your way to the finish line faster than the rest. And I think a lot of us struggle with trying to find what we're good at. It's taken me a long time to find like my strengths and stuff and how I can And so, in terms of adulting and stuff like that, right? That's a really, really big part. And I think I do think a lot of adults go through life not finding that groove, that strength, and that ability for them to really find what they're truly good at and stuff. And so, as a parent, you said at the start, I have 3 kids, and I'm really cognizant of that. And I want to just those abilities to find your strength and find where you can find your own personal leverage, I guess, is what I'm trying to say, right?
Yeah, find what you're good at, and like if you can find where that intersects with passion, like really the sky is the limit. And that's one thing that is super important in real estate. And if you listen to anything or read anything, Bigger Pockets, they talk about that all the time. Like find what you are good at. And it's not necessarily like, okay, say you start in single family homes, which is where a lot of people start, right? That doesn't mean
Mm.
just because you have a lot of experience there, you should stay there. You can, right? Frugal Mogul on Twitter, right? He's the single family home guy. Like that's what he's going to do. I started there and was like, nope, I want to have multiple doors under one roof, right? So,
Hmm.
or at one address. So now I'm like, I've got a couple duplexes and then this kind of funky bed and breakfast that I have, right? Some people, and then you can move up from there, right? Your father-in-law, he's done apartment buildings and stuff like that. Like that's
Hmm.
super cool. But every step of the way, and I just did a podcast a little while ago with Alan Corey, and we talked about like this ladder, this real estate ladder that's in his book. But you go up these rungs and then you kind of find the one that works for you. And then you kind
Hmm.
of just stay there and get really good at everything. And
Yeah.
you don't have to do everything yourself. A lot of people, I think, get caught up in the I need to property manage myself. I need to go on YouTube and learn how to tile, right? No, you
Hmm.
don't. Like you can go for it if you want, but
Hmm.
you don't have to, right? Find what you're good at, and then just do that over and over and over, basically.
Hmm. Yeah. Yeah. Exactly. Yeah. For sure.
So back to that first deal, then you
Yeah.
bought it for 360. Do you know how much you put into it and how much you sold it for in those
Yeah.
5 days?
It was 55 was the rental that we put in, and then we sold it for four. We listed it at 499, and it sold for 488. And then we just split up the profits 5 ways, I think it was, on that one there. So it
Okay,
was,
good
I
enough.
think it,
Pretty
yeah,
good.
it ended up being about 70K that we split. And then, yeah, I was like, we have to do this again, guys. Like, we got a good team. We have a lot of strengths and advantages here. Let's do it. And so we found that next one that was in a different area of town. It was built in 1910. As soon as you walk, they were having a real hard time trying to sell it. They had listed it at 380. No one was biting. And then they dropped it to 333. And again, nobody was biting at that. We went in and you could tell right away, like, okay, yep, I can see why people are shying away from this. Like it's old. They had crooked windows. It
Oh
was
yeah.
settling
Oh
weird.
yeah.
Yeah,
I'm so
and
at 1910. I'm feeling this. I know exactly what this is like.
yeah, and the floors had started to sink.
Yep.
And you feel it. You walk in, you're like,
Yep. Yep.
yep.
I get
Mm-hmm.
this.
This
I have a
is
my house 1901. You're speaking my language. Definitely. Yep.
and I full disclosure, I was a little hesitant. I'm like, guys, I don't know if this is a good idea. This is like major work. This isn't like just, brush it
Right.
up and make it look nice. We got to readjust the floors.
Yeah. Yeah. I've done that. They did. I hear the guys under the house and they're like, bump it. And it's like, meh. I'm like, oh my God. Oh my God. They're raising my house. They can be
Right?
done though.
Yeah.
Yeah.
Yeah. Yeah. And so, here's the crazy thing. So I was actually against the house, but her family, like, they was like, nope, we got to do it. And I'm like, all right. I mean, I'm in. So let's do this. And so to get this, so to fix okay, I don't know how much you think a level floor is worth. I don't know, maybe 20 grand. Like,
Yeah.
if it wasn't level, what would you penalize it as?
Yeah. I mean, I know ours was 26. So
And we fixed it for two.
what?
Yeah,
That pisses me off. I'm not gonna lie.
we fixed it for two. We got this guy in. It was just all labor. He was able to realign the whole thing.
That some guy told us like he did that. Like there's a guy that's like I don't know part time homeless or something. I don't really get it, but he's like, yeah, I paid him 2 grand and he leveled my
Perfect.
house. I was like, we ended up like we had a company that they jacked it up and
Yeah.
then they put in 2 new beams because the spans in this house were long. Like like if you're looking at the house widthwise, there was only one beam down the middle. And now if you were
Yeah.
going to engineer this house, you'd put in two beams. So now we have three beams. So we've got new beams, they shimmed everything, and there's a 25-year warranty that it will not sink. We went hard at it, but like my husband's like, if I have one regret, it's that.
Yeah.
Like, I know. It was hard because that's hard because no, like you don't see it. Like
Yeah.
it's not like kitchen. You spend 26 grand on a kitchen. You're like,
So
oh yeah, you know.
it's one of those things where you don't see it, but you feel it though. And I
Oh yeah,
all of
yeah,
those things that you touch and feel. So like the doorknobs,
yeah,
anything that you touch, like your feet and your hands, whenever you're going around in the house, especially if you're trying to sell it to somebody,
yeah,
for like, for a flip, you want to make sure that the door handles feel really solid and good. They're on straight. The
yeah.
flooring feels really good. When they're walking on the carpets, nothing's just the touch points are super important.
Oh yeah, yeah. I mean, there was a window that we couldn't open when we bought it, and then like now it opens. It's pretty cool.
Yeah, exactly. Yeah.
Yeah, and
And
doors. Yeah, like doors, like they don't fit in the frames that well before that. You know.
you
So.
know, I think this house had 8 doors that we replaced on it. And I don't think any one of them, when we put them back in, were fit.
So it was so 380 to 333. What did you end up getting it for?
We got it for 282. In fact,
Oh
we
my
offered
gosh!
we
Wow.
offered 280, and the guy was like, "I'm not. There's no way I'm taking 280." And so we're like, "Well, what do you think about 282?" And we said no conditions, cash. Like we have it. It's
Right.
here.
Right.
If you say yes, you give us the date. We'll take. Like we're very accommodating.
Right.
You give us the date, we'll have the cash here for you. It's no problem. And so those are really strong tools. And it had been on the market for so long, right? Like we went through the price declines and stuff that we were talking about,
Yep.
and so they took it. They have no problem. Now this was supposed to be just like a 2-month, maybe max 3-month project.
I know where
Took
this
it.
is going.
Yeah, it took 6. And
Jeez.
it didn't cost, we budgeted 20 to 30. It cost 70.
Wow. Yeah.
Yeah. So it was more expensive than the previous one. It was twice as long, but at the same time, so we reflected on that a lot too. Like, why is this taking so long, guys? And, a lot of it was just we're working, we all have families, and we're doing this after work. Like,
Right. Right.
um,
Get
you
it.
know,
Yep.
we online everywhere, everyone's espousing work-life balance, mental health. We got to take care of it. Like I was so off balance. Like I'd wake up at
Yeah.
5, I would do my blog for as long as I could and schedule tweets, reply to what I could, and then I
Hmm.
had to get to work.
Yeah.
9 to 5 type of thing, finish that, and then go to this house until 9 at night.
Yeah. No,
And like,
I completely get it. I know. Well, it's interesting because you have the one side that is all about like self-care, work-life balance, mental health. There's another section of the internet that's like hustle culture, right? Which
yeah,
is like they think you should be doing exactly what you just said, but like all the time forever. Which
I
like
know.
I can't do it. Like we've yesterday was 2 months since we closed on our last place. And like, but it's like most weekends we've been there, you know. I'm not doing the nights thing. I'm just not doing it. But on the
Yeah.
weekends we're there. And I'm like done. Like we're taking pictures next week and I'm like, thank God it's gonna be done by then. Because I can't do this all the time.
Yeah.
And you did it for 6 months and you're expecting two. That makes it even harder, I think. Every month after that, you're like, dang it.
Yeah, right. Yeah, like, and it was yeah, exactly. It's tough when you're expecting 2 and 3, and then it becomes double. We finished, yeah. So we listed it at 499, and so there's a lot of cheddar there if we can get that. So that'd be
Yeah.
127 if we get in that area there, and we'll split that again. We've had a ton of showings on it. We haven't sold it yet. We've had a lot of showings on it though. We get like text message alerts when the buying agent's going to go in, and so there's a really good chance it's perhaps listed too high. We probably have to bring it down a little bit because we're not getting any like offers or anything like that on it and stuff. But anyways, we still got a lot of buffer on there and stuff that we can go through and stuff.
So on those projects, is there any one thing that you did that you kind of never thought you'd be able to do before that?
No, yeah, that's a really good question. I would probably say half the stuff we were confident on, the other half we weren't, and we learned. And we would make a mistake and have to redo it again. There was a lot of rework that we had to do.
Yeah.
And, we're keeping our standards high. We want to make sure that the work is done well
Yes.
because we know that it's going to, it'll show when it's showing. And so we need to make sure this is nailed down tight and right and done correctly and stuff. So it was probably one of those things where you're not confident, try, okay, you didn't do it, try again, okay, all right, maybe we need to get a trade in for that. And so that
Right.
happened with plumbing. We got some plumbing in to help us with that. But, most of the time you're able to learn through. And my brother-in-law, who's the real estate agent, he has access to some trades
Right.
that saved us a lot of money. Yeah.
Yeah. Well, what was cool too for us last year, we hired a lot of it out, but a lot of stuff we kind of were the project managers, and my husband does a lot of stuff himself. But he also like amassed so many tools,
Yeah.
where it's like, so now that we have this next place, it's like we have every. First of all, we had the same landscaper we have at this property. We had the same floor guy we used at this property. My husband could have done it, but it was like a risk, like a cost reward thing. Like, what else could he be doing? Hired that guy right up. And then everything else my husband's had to do, he has it. Like, it's like just incredible how that happens. So that's kind of like this idea of, once you're good at something, the next time you do it, I
Yeah.
don't know, it's been easier because we also knew a little bit more what to expect. So do you think you would have done the second, so the first one you made like 70 grand off total that you
Uh-huh.
guys all split. Would you have done the second one if that number was any lower? Like if you made like 25 instead of 70, would you still have done a
No,
second flip?
no, that's way too tight.
Right.
Yeah, it's not worth it. Even with this, like with 127, that's definitely worth it. When it starts dripping down into the sub 100s, considering the time that we put in and the sacrifice that our families had to make in order for us to
Yes.
do this. So if we nail that and it's like, yeah, we got, let's say 115, yeah, we're probably going to start hunting around for another deal. Because that's another thing too, and it's really important too, is people see the end result and they celebrate it, and they don't see the resistance and the struggle and the difficulty of how you got there. That whole end justifies the means type of thing. And so when we look at this again and go for our next deal, first we got to be patient. You can't force these things. You can't try and make a deal happen,
Right.
right? Because you can really get rolled in over your head. And so we want to make sure that there's a good deal. And we got a bit of a system where we'll take that distressed property, that foreclosure, that one that's really dilapidated, and we'll fix it.
Yeah.
And we're confident that we can do it.
So are you looking now or are you waiting?
No, we're waiting. Yeah. So we it's the market here in Calgary is really stupid. Like I don't know what it's like there and where you live, but here it's ridiculous.
Oh yeah,
And so
it's nuts here in Florida too.
like the
Yeah.
risk reward, right? It's like I just kind of always think in my head, what are the probabilities of certain
Right.
things happening and
Right.
stuff, and
Yeah.
it's like, well, odds up, odds down. Is it going to like if things shoot again up? Like, what's happening to make it do that? Like,
I
is it
know. I know.
right? So that's kind of how I rewind it back in my head of like, I think we're going to take a break. We're going to wait probably 4 to 5, 6 months. But if something pops up, we'll jump on it though.
So other than being patient and having a system, if anybody's thinking that they would like to flip houses, is there anything else that they should know?
It's not like the TV shows.
Good
Although
one.
it can be just as dramatic though. Like because you're working with people, right? Like unless you're doing it all alone or you're just hiring trades. But even with the trades, there'd be some drama. But with
Oh
us, with
yeah.
family and stuff, it was just, you know, it's just after we get into I don't want to make it sound like there was arguments and stuff. There weren't, but it was just everyone sees things just a little bit differently, right? In terms
Yeah.
of even the styling. Should we use black handles or brass, or should we use this type of flooring or the other type? So there's always a
Right.
bit of, give and take type of thing. I'm sure you guys are familiar with that a little bit, but
What about a detailed spreadsheet? Do you think that you maybe should have done that?
probably. Yeah. I think it came up a couple of times where we're like, hey, why don't we do like a Google Docs spreadsheet and
Yeah.
share that?
Yeah. Yeah.
So there's a bit of that.
Yeah, that was our problem with the place we just bought, which actually we're moving into that and Airbnb being where we are. But with that place, like I knew we had to do the floors and like the railing of the stairs was not to code. Like the slat, there weren't like the slats that you're supposed to have. So I'm like, okay, we got to redo the railing. We need to do the floors and then like maybe get appliances, whatever. So like all these conversations that I had, right, or with my husband,
mm,
where we're talking about it, he also was like, and we're gonna do a lot to the yard, which I
hmm
didn't think of. Okay. And we
hmm
did so much to this yard here at the place we did last year. And I'm like, duh, I should have known that. I should have budgeted for that. But I didn't. And you know why? Last year, because it was such an involved reno, it was like $170,000. Like
Oh,
so
gee.
much. That's a
Yeah.
lot of line items, right? You've
Yeah.
got
Yeah.
kitchen. Obviously, we had the structure, we have the fence, we have a whole entire yard demo, and then there's multiple buildings here of stuff that we had to do. We bought like 5 toilets last year, like crazy. Where I because it was a bigger job, I had it down and I like nailed that budget like within like $1,000 last year.
hmm
And then we had a $10,000 unexpected repair this year. So it ended up being like actually 10,000 off. But at the other one, it was just seemed so small that I didn't do a spreadsheet for it. And so now everything feels unbudgeted. But had I really thought about it,
Yeah.
it would have been on there and I would have just been better prepared for it.
Yeah. No, I think that those are terrific ideas. It's strange too because coming out of the first one, we thought we should really start doing some spreadsheets and stuff, and then we went to the second one and it never happened because we thought it was going to be so low scope. It's like
Right, right.
don't
Like,
take it for
look,
granted.
there's things too, and time wise, right? My husband's like, okay, I'm going to redo all the outlets, because they were like the
So
off white ones. I'm like, that
yeah,
takes actually, it's like 15 minutes an outlet. Like, you got to budget like a couple days for that.
so one thing that we found, so we and I'm sure you can relate just with the age of home. So we had to re-drywall the entire house.
Oof.
We had to take off the old wall. I don't even know what that was called. Plaster with
Plaster, yeah, with the
lat or
wood
something.
under it, lathe, yeah,
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 and
yeah.
I was
I
like,
am aware, yeah.
I'm sure I inhaled some really old chemicals. Like
Oh
as we were
yeah.
pulling off, I'm like, I just inhaled something. I gotta go outside. Like, anyways, so we hired this drywall guy. We paid him 10 to do the whole house,
Yep.
and it was I forget actually if that included materials too. I don't think it did. I think we had to bring the materials as well, like the drywall and gypsum and all that. So he was really slow and it really put us behind the eight ball. That's the number one reason why we took 6 months to complete this. And so while we saved money on getting a cheap trade in, and we paid for it on the back end by literally it could have cost us in the end too big because we're kind of getting the tail end of the hot market. But if we
Yep.
had been listed in
Yep.
the absolute white heatness of this market, it would have been sold already. So I don't think you need to get the most expensive trade out there, but don't get the cheapest guy because you're going to pay for it in other ways.
Absolutely. Absolutely. And this is something that you always really need to consider is the opportunity cost and time. I mean, time
Yeah.
really does cost money, whether it's just selling it, so selling it at the right time, or in our case what we're dealing with is the sooner we get this new place done, the sooner I can Airbnb where I'm sitting, right?
Uh
So
huh.
if I can do something that speeds us up a day and it's $100, I should do it 10 out of 10 times, right? Because I can maybe
Yeah.
make $100 a night on Airbnb. So Or like I said, hiring the guy to do the floors instead of my husband doing it, right? Because he can really only do that on the weekends. He's working as an engineer the rest of the time,
Mm-hmm.
So how many weekends would that take? So that's such a good point where you always have to kind of be balancing. Okay, it just because something costs more doesn't mean it's the wrong decision.
Exactly. So with yourself there, with that kind of, I don't want to say weighing over your head a little bit, but I guess it is a, with you're looking at this saying, hey, as soon as I can get this on Airbnb, it's $100 a night. Do you find that, is it stressful, or uh, like how do you handle that yourself with that weighing of $100 a night
Well,
opportunity cost?
again, compared to last year, so last year we knew when we were done with our reno that we were going to get three places up. So, and we budgeted 5 months for the reno. It took six. So I kind of got used to the idea last year that I'm sitting on money that's not coming in. So
Mm-hmm.
comparatively, doing that it's only been 2 months, and it's going to end up being, I budgeted 2 months. It's going to be 2.5. So
Mm-hmm.
we're really not that far behind. And some of the reason we are behind is because we've made personal decisions to, you know what, let's not go over there today. You know what, it's
Mm-hmm.
okay if we want to take a Saturday or we want to take a Sunday, we want to play pickleball and then lay around or whatever, hang out with some friends, go out on the boat. You know what, let's do it.
Yeah.
It's not the end of the
Yeah.
world. I started to get stressed. We were behind schedule last year because like we were supposed to finish up right around Halloween, and we finished up like mid-December, and that wasn't on me either. Like that was the contractor that pushed that. Like
Yeah.
no matter how many conversations I had, like, hey, we need to get this up and running. But on the bright side, here in Florida, season is January, so we were still able to get going the
Yeah.
first week of January for one, second week of January for the other, and third week of January for the third. So, and we're in that position now too. Everything's going to be up and running. I am looking forward to next year, much like you. I'm going to take a little break, for a little while, get some of that
Yeah.
work life balance. Hopefully,
Yeah.
life work balance. Actually, I would like life to be weighted more
Yeah.
heavily for a
Yeah,
little
yeah,
while.
right. Yeah, I like that actually. Life work balance. I like that a lot. I'm gonna start using that.
I don't know if I stole it or if I made that up
Yeah.
just now, but
So one of the problems we did run into as well, and I'm curious if it's impacting you at all, or if it has, is just supply materials. So and cost of those. So we ran it like the lumber and the wood. Like people joke about it on Twitter, where like some guy's driving by with a truckload of wood, and it's like, look at the local millionaire driving by,
I
and
know.
I know, ha ha ha. But it's actually true. Like the price got ridiculous, and
Yeah.
I'm
Yeah.
curious if you've run into that at all.
We did. So last year, we started in July and we were done in December. We bought the house in June. So towards the end of it, we were starting to feel the lumber crunch or the wood crunch in general. Like we redid a bunch of our siding, but we didn't feel it that much last year. My contractor was checking in with me recently, and he said, "Hey, your job, which I told you was like 160." He's like, "Well, that included the yard and stuff, so that doesn't really include this contractor." But he was like, "Your job would be 25 grand more if we did it this year." That's what he said. So that's the
Oh,
difference between last year and this year. How I did get affected by it is the roof on one of our duplexes was installed incorrectly 8 years ago. And so two or a year and a half ago when we bought it, it's like, okay, it's a 6, 7 year old roof, like no problem. Well, we had to replace that roof at like the peak of lumber prices.
yeah.
So the roof was 12 grand and the wood was six. So, and this is like a pretty small building. Luckily
Yeah.
that roofer's letting me like make payments on that because I also at that same time, one of the renters stopped paying.
Oh, geez.
So, because you can't get them out. So that affected me there. It's something like kind of dumb. Like I told you last year, we bought 5 toilets. We bought two of those toilets when we bought the new duplex, and they were 200 last year. They were 250 this year.
Yeah.
Like just totally different. And like little things like we bought those like plastic, little, it's dumb, but like plastic Adirondack chairs for like around the fire pit. We bought
Yeah.
them for this place. They were 20 each. We bought them for the other one. They were 22. So you can definitely see that prices have gone up, and it's not just lumber and used cars. In my opinion, like people are saying, there's been prices that have gone up almost everywhere that I've seen, and I have like year over year examples of it. And even like we're getting the roof done on one of the units here at the bed and breakfast, and that price went up 19% from 2 months ago. 19% that went up. The price of that. I was like, which is only, it's only like $1,500 or something. But when you do the math on that, you're like,
Yeah.
this is insane.
Yeah.
I just wasn't ready to pull the trigger in May, right? Because I'm doing all this stuff at the other place, but I didn't think, May to July that was going to go up that much.
So, from your point of view, are you doing anything to kind of protect yourself or invest
Yeah.
into it at all? I mean, like
Yeah. I
you have
mean,
the natural hedge just with the real estate portfolio that you have, but I'm just curious if you're making any moves to protect against that and anything.
well, when you're into real estate, you often don't have any cash. So,
Yeah.
and doing the cash out refi on this place, at the bed and breakfast, which is where I am, we got our rate. We did a cash out refi, and our rate is 299. Then
Nice.
we're moving into the other place. That rate is 325. And those were both 80% loans. So
Uh-huh.
we're heavily leveraged. Like we own between 1.1 and 1.2 is the value of our three properties put together.
Uh-huh.
And some people will think that's insane. Like if you're listening in California, you're like, holy crap, three properties for 1.2. But our mortgage is like 620 total. So, and we don't have a lot of cash. We put a lot of cash into the place. And the place we just bought, luckily, it appraised for 10,000 more than we bought it for. So we had some instant equity there, and then we're leveraged. So
Hmm.
when you're leveraged in real estate from an inflation, and we don't have a lot of cash sitting around from an inflation perspective, we're
Hmm.
pretty well protected. And then we have about 40% of our total worth is in stocks.
Hmm.
So yeah, we're pretty well. I mean, we have our cars. We own our cars outright, so we're not leveraged there at all. But we're pretty leveraged.
I've never heard of anyone saying they're leveraged with their cars or
No,
like, you know what
I
I
mean
mean? Like,
that we not that money is sitting there depreciating.
I see what you're saying. Yeah.
Well, not in the last 3 months. I guess cars have gone up in value for some stupid reason, but
Yeah.
um,
So
but
can
yeah.
we are we allowed to talk about the stocks at all?
Hey, everybody. Sorry to cut you off there. You can probably guess where this is going. Um, we are going to split this episode into two parts. You've just finished part one. Now go ahead and head over to part two for some bonus content where Stephen interviews me.